The recent flare-up between Israel and Iran and now the US launching strikes on Iranian targets, it's unclear whether the markets will surge or take a hit. But if we look closely at how the markets have responded so far, the direction seems surprisingly positive. In the past 3 days, the US reportedly hit Iranian nuclear facilities. At the same time, Russia has made alarming statements, hinting that other nations might be willing to help Iran obtain nuclear weapons. A possible Iranian counterattack on the US is still on the table, and that could rattle global markets. Adding fuel to the fire, Iran's parliament just approved a motion to shut down the Strait of Hormuz, a critical shipping route that handles about 25% of the world's oil supply. That alone has the potential to send oil prices through the roof. And yet, despite all these developments, the market's reaction has been surprisingly mild. Stock futures only dipped by around 0.5% at the open, and oil prices climbed less than 2.5%. These numbers don't reflect panic or fear of a prolonged conflict. If traders believed the strait closure was imminent or that the conflict would escalate significantly, we'd already be seeing oil at $120 per barrel. But the current price action tells a different story. As of now, the market is signaling that this confrontation may be brief and controlled. So unless things spiral, we could actually be looking at a market recovery or even a rally sooner rather than later. We're now seeing oil prices ticking up by about 2% as the market's immediate reaction unfolds. But again, this kind of modest move doesn't suggest that investors are bracing for a drawn-out war. Even more surprising, Israel's stock market is hitting brand new all-time highs, right after the US launched strikes on Iran's nuclear facilities. Yes, on the edge of what some might call World War III, Israel's equities are still climbing. That's a powerful signal from the market. Historically, market behavior during wartime follows a familiar pattern. A sharp dip in the short term, followed by strong gains as the conflict progresses or resolves. So while war tends to shake things up early on, over the long run, markets usually bounce back stronger. Now we're hearing fresh reports from the Wall Street Journal stating that Israel is aiming to wrap up its military campaign against Iran soon. That aligns perfectly with what market action has been showing us. This conflict could be over much sooner than feared. Switching over to crypto, we're starting to see a solid rebound taking shape. Bitcoin has surged to $103,000, signaling renewed investor confidence. XRP also saw a climb, jumping from around 190 to 2.5s, a clear upward move. Plus, we're seeing a bullish signal from the Stochastic RSI. If this crossover gets confirmed, it could mark a solid entry point for adding more XRP to your holdings. Of course, the ideal buy-in would have been closer to 1. So now the big question is, was that the bottom for XRP, or are we going to see one more dip before it truly takes off? Looking at the XRP to Bitcoin chart, we're right on the edge of a breakout moment. If this plays out, we could see XRP gaining dominance while Bitcoin takes a backseat. And based on this pattern, price projections for XRP are huge. We could be looking at gains anywhere from 10x to even 30x if this breakout confirms on the XRP-BTC pair. Now let's talk about some key XRP timeline markers. We've got a wave of potential movement dates lining up from June 22nd through July 22nd. There's a pattern, it ends where it begins. This also lines up with the summer solstice. Key dates to watch include July 13th, July 30th, and August 9th, and there's more. Uphold hinted at 4-digit XRP tweets. Phrases like May, September shine like gold, and December keep coming up. We've got October 13th, October 22nd, and Halloween, October 31st, where Ripple CTO David Schwartz cryptically posted, "Why does Halloween feel like Christmas?" It doesn't stop there. Week 44, November 4th, and again, those references to December 22nd to 25th, and then December 30th to 31st. And don't forget, we're still waiting on that TT Coriolis Borealis event, which some believe could coincide with XRP's breakout moment. Insider talk suggests XRP might rally right alongside this rare celestial event. From a technical analysis perspective, July could be a game changer. We're seeing XRP coiling into a massive triangle on the monthly time frame. When that triangle breaks, it's all or nothing. We're either headed for a crash or a monster rally. It's make or break time for XRP. There's also a past message from Ripple Crippler, an XRP insider posted way back in January 20. Whether it was early or a longer setup, it aligns with this July once again being positioned for something big. And lastly, this gem, everything is happening quietly behind the scenes. Retail won't be able to grab it all, especially when most people don't even know what XRP is. The average person simply doesn't have the resources to scoop up large amounts. But when escrow is turned over to entities like the IMF, that's when everything changes. And the IMF, they've already revealed plans to hold digital assets. We even had that deleted announcement suggesting SWIFT is integrating Ripple's XRP escrow system. It's clear the biggest players, the 1%, are preparing to take control of XRP's supply. And once that happens, well, the rest of us may be watching from the sideline. That wraps it up for today's video. If you found this valuable, drop a like, subscribe, and I'll catch you in the next one.